In the economy this week, inflation may be getting a little more cooperative. The Federal Reserve remains reserved. Small business owners are both more optimistic and less certain about the future, and the budget deficit just keeps growing. Before we begin, remember to like this video and subscribe for more economic updates. On Wednesday, the Labor Department informed us that the nation's most widely followed inflation gauge, the Consumer Price Index, decelerated last month. In fact, the headline numbers showed no increase on a monthly basis, while the annual figure increased 3.3% year over year, a tenth of a point slower than April's rate. Economists had expected annual CPI to match the number from April. Core CPI, which excludes food and energy prices, improved last month as well. Monthly core increased 0.2 of a point in May, its slowest pace since last October. Year over year, core CPI came in at 3.4%, also a tenth of a point slower than economists expected and its lowest level in 3 years. On Thursday, the Labor Department reiterated the prior day's optimistic inflation messaging, announcing that the monthly Producer Price Index, which gauges price pressures at the wholesale level, actually fell 0.2 of a point in May. Year-over-year PPI increased 2.2%, same as April. That was seen as good news considering the annual index was expected to rise 2.5%. There was also good news in core PPI, which strips out food, energy, and trade services. After rising a half point in April, monthly core was flat in May, while the annual rate matched the previous month's number, landing at 3.2%. 2 straight days of more hopeful inflation numbers seem to put the possibility of interest rate cuts in the near term back on the table. Right now, CME Group's FedWatch tool says there's a roughly 70% chance policymakers will lower the federal funds rate at their September meeting. As for Federal Reserve officials themselves, they may not be quite as optimistic as the markets just yet about the prospect of rate cuts. Policymakers wrapped up their 2-day meeting on Wednesday by leaving rates unchanged for the 7th time in a row, a decision that was expected by practically everyone. They did, however, make a key revision to the summary of economic projections, updating it to reflect just 1 rate cut before the end of the year. In March, officials forecast 3 rate cuts by the time 2024 was finished. In his post-meeting remarks, Fed Chair Powell acknowledged the upbeat CPI report released hours earlier, but underscored that it's probably going to take longer to get the confidence needed to loosen policy. In other news, the National Federation of Independent Business reported on Tuesday that its Small Business Optimism Index rose 0.8 of a point in May to land at 90.5, the highest reading so far this year. It was a mild surprise to the upside, as economists had expected the index to remain unchanged from April's 89.7. However, it was also the 29th month in a row the metric came in below its historical average of 98. Additionally, a companion measure, the Uncertainty Index, rose 9 points to 85. That's the highest reading for the Uncertainty Index since November 2020. Finally this week, the Treasury Department released its monthly statement for May, and it confirms the federal government remains on course to finish fiscal year 2024 with an even bigger budget deficit than it racked up last year. According to the data, the deficit grew by nearly $350 billion last month to reach a running total through May of slightly more than $1.2 trillion. Currently, the deficit is on pace to surpass $1.8 trillion, which would make it the 3rd highest deficit in U.S. history. That's it for now. Thank you for joining us this week, and we look forward to seeing you next week. This is Devlin Steele for Augusta Precious Metals, signing out.